Somewhere in a warehouse in London, a vault door clanks shut empty. A screen flashes red. Inventory depleted. In New York, a trader refreshes a silver quote. Nothing moves, and halfway around the world. A solar manufacturer delays production not because of money, but because the metal is gone. No alarm goes off. Headlines speak of tech stocks. But in the background, one of the most important industrial metals on Earth is slipping into silent scarcity. There is no panic. Not yet. Because the world does not realize what silver does, or what happens when it runs out. And when it does, the reckoning will not be gradual. It will be involuntary. For decades, silver has been misunderstood. It has been branded as gold's lesser cousin, shiny, decorative, and cheap. It has been traded as a commodity, priced like a side note in the metals market. Ignored by policymakers, dismissed by hedge funds, and ridiculed by Wall Street. But that perception is an illusion, because silver is not just a store of value. It is infrastructure. It is the most conductive metal on the periodic table, greater than copper, cooler than gold. It does not corrode. It reflects nearly all visible light, and it kills bacteria on contact. You will not find a smartphone, a satellite, or a military-grade missile that functions properly without it. Every modern technology we claim will shape the future, from solar panels to electric vehicles to artificial intelligence hardware, runs through silver. And here's the contradiction. Demand has exploded, but the price does not reflect it. As of today, silver trades for around $30 an ounce, far below its inflation-adjusted high from over 40 years ago. And yet, 5 years of consecutive deficits tell a different story. Supply has failed to keep up. Stockpiles are draining. In global logistics networks, delivery delays for commercial silver are becoming more frequent. The real market is moving, but the perception has not caught up. Because the systems used to value silver, the contracts, the pricing mechanisms, and the headlines are still stuck in the past. The world is burning silver faster than it can be replaced, but the markets are acting like nothing has changed. If silver demand is surging, why do we not just mine more? That is what conventional economics suggests. Higher prices should lead to higher production. But silver breaks that rule. Globally, only 28% of silver production comes from primary silver mines, places that actively target silver. The other 72% is a byproduct of mining for copper, lead, zinc, or gold. This makes silver geologically subordinated, a secondary metal extracted only when its host metal is profitable. That means most major mining companies do not care about silver. If copper prices fall, they pull back production and silver comes offline with it. Even if the silver price skyrockets, the supply chain does not immediately respond. Silver is geologically rare, and the deposits we have are weakening. Or grade decline, the amount of silver contained in each ton of rock, has been falling for decades. In 2005, a single ton might yield 14 ounces of silver in 2024. That number is closer to 4 ounces. That means more rock must be processed, more fuel must be burned, more workers hired, more water used, more waste created. Mining is becoming more expensive, more regulated, and more politically volatile. Key supply countries like Mexico, Peru, and Chile are all facing taxation protests, environmental pushback, or social unrest. Add inflation to the mix, rising diesel, mill equipment, explosives, and the result is a hard limit on output. According to the Silver Institute, mine production has been flat for a decade. Roughly 830 million ounces per year. That is the effective ceiling. Even if a massive new deposit were discovered today, it could take up to 15 years to bring it online. The faucet is rusty. The water pressure is dropping, and the world is demanding more than ever. Demand used to be flexible. In the past, silver was used for coins, jewelry, photography, things you could delay, scale back, or eliminate during hard times. That world is gone today. Silver demand is structural. It is built into the systems powering the global economy, and nearly none of it is optional. Let us start with energy. Every solar panel ever manufactured contains silver, not because it is decorative, but because it is essential. Silver is printed onto each cell in a paste that collects the electrical current. And as solar technology has advanced, newer high-efficiency designs use 50 to 80% more silver per panel. The result: in 2023, solar panels consumed 190 million ounces of silver. In 2024, that number exceeded 230 million ounces. Forecasts for 2025 suggest demand will break 300 million ounces, more than one-third of the planet's entire annual supply. This is demand driven by law, not market whim. Governments around the world have passed climate targets, granted subsidies, and signed energy mandates. They are not asking the market if solar is profitable, they are requiring that it happens. And solar is not alone. Electric vehicles use 2 to 4 times more silver than gas-powered cars. Data centers, military guidance systems, 5G towers, satellites, all of them silently absorb silver by the ton. The technology curve is steepening, and every step forward pulls silver with it. You cannot remove it, you cannot replace it. We are building the future on top of an element that is running out slowly and irreversibly. When demand rises and supply flatlines, the gap is filled from somewhere, in silver's case. That somewhere has been vaults above ground stockpiles built over decades of oversupply and industrial recycling. But those vaults are now running dry since 2021. Silver inventories at the COMEX in New York and the LBMA in London have fallen by over 40%. The registered category, which represents silver available for immediate delivery, has collapsed by nearly 70%, and unlike gold, silver is not recycled the same way. When it goes into a solar panel, a missile, a phone, or a medical device, it is often unrecoverable. It is either glued into place for 25 years or vaporized during use. Recycling does exist, but it accounts for only about 180 million ounces annually. And that has remained flat for years. Meanwhile, the physical deficit continues. According to the Silver Institute, demand has outpaced supply by over 200 million ounces per year for the last 3 consecutive years. This means the global system is now consuming silver faster than it can be mined or recycled, and much faster than it can be restocked. At this rate, some analysts suggest that easily available commercial silver could become critically limited within 12 to 24 months. The world is dipping into reserves that took generations to build, and draining them into systems that cannot return it. A shortage is not coming someday, it has already begun. And when the final ounces leave the vault, the price screen will still say $30 until the phone rings and no seller answers. Look at your screen. The silver price says $30, but that number does not come from a warehouse. It does not reflect a bar being loaded onto a truck. It comes from a paper contract, traded on platforms like COMEX in New York or the LBMA in London. These contracts are futures promises to deliver silver at some point in the future. But in reality, most of those contracts are never settled in metal. They are settled in cash, and this loophole fuels a dangerous illusion. Estimates suggest for every 1 ounce of real silver in the vault, there are between 300 and 500 ounces of paper silver contracts circulating in the system. Imagine 500 people holding keys to the same car, confidently assuming they will never have to drive it at the same time. As long as no one asks for physical delivery, the system seems liquid. But if just a small percentage of industrial users demand actual bars instead of settlement payouts, the leverage snaps. That moment has already begun. More contract holders are now standing for delivery, refusing cash in favor of physical metal. Behind the scenes, silver is being rapidly moved between stockpiles in New York, London, and Shanghai in an attempt to hold the illusion together. But illusions do not last forever, eventually. Someone calls for metal and is told, none available. That will be the day when the market price no longer matters. Because in real-world supply chains, you cannot build with a promise. You need the metal or the system stops moving. While Western investors debate short-term forecasts, countries like China and India are planning decades ahead. China already dominates rare earths, lithium, and cobalt. Now they are moving aggressively on silver. China produces over 80% of the world's solar panels, and they know precisely how much silver they need to maintain that dominance. Market data now shows consistent price premiums on the Shanghai Gold Exchange. Sometimes as high as 10% above COMEX, that premium acts like a magnet. Physical silver is being bought in London or New York, shipped east and delivered into Chinese and Indian vaults. This is not an accident. This is strategic accumulation. India, too, is importing more silver in 2024 than in any year on record, purchasing silver bars, industrial-grade metal, and jewelry at record speed. Western inventories drain while Eastern nations prepare. They understand something most of the West has forgotten in a world of scarcity. Metal is power, and when the supply runs low, they will not be begging for silver. They will be selling it at their price on their terms by then. It will not just be about profit, it will be about leverage. The silver shortage is not a theory. It is a math problem, one the world has chosen to ignore. Supply is stagnant. Demand is accelerating. Inventories are draining. The price has not exploded yet. Not because the crisis is false, but because paper promises are still louder than physical facts. But history has taught us this. Markets do not reprice slowly forever. They do nothing for years until they do everything in days. And when it happens to silver, the world will not be asking, why is the price exploding? It will be asking, why did no one see this coming? But some people did. Some looked past the screen price. Some listened to geology instead of headlines. Some understood that real wealth is not a trend. It is a resource. Silver does not need hype. It does not scream for attention, but when the system runs out, it will be the one thing everyone chases and almost no one finds. When the world finally needs silver, where will it come from?